Sky News Live.
This is breaking news.
We are seconds away from breaking news on jobs. Of course, Ingrid, expectations, dollar poised around the 73.54 level now ahead of this release.
Yeah, we've got expectations for a 6.1% unemployment rate with jobs added. Consensus on Bloomberg is for 10,000 jobs to be added, so we're about 9 seconds away from that. The participation rate expected to stay steady at 64.8%. Interesting, because last month we got an increase in full-time and a decrease in part-time jobs. Just watching for this number, it should be coming out right now as we speak.
Well, there
it is. 38.5 thousand jobs added, but the unemployment rate ticking up to 6.3%.
There we have it. So again in the unemployment rate to 6.3 from 6, and 38,500 jobs created against the consensus call of 10,000. Full-time employments, well, it's looking at the dollar spiking on that news.
4 US
about
cents.
20 bips up on the release, indeed a quarter of a US cent, and that full-time component 12,500.
Okay, here's the interesting part. The participation rates ticked up to 65.1% from 64.8. That's quite a significant bounce in the participation rate, which is why we could see why we see that sort of disparity between how many jobs have been added plus the unemployment rate actually ticking up to that 6.3% level. Let's bring in Simon Boulton, director at Aequalis Consulting, live in the studio right now. Yeah. Simon, as I mentioned there, just how sensitive is the unemployment rate to that part rate, given the fact that we added close to 40,000 jobs?
That's right, and that's a big increase, Ingrid. You know, the forecast was for 10,000. You know, month on month, we're tending to produce that sort of 10 to 12,000, and for it to go up by 0.6%, I think that's unparalleled. I think even The Economist got that one right again.
It is, though, the start of the new financial year. It's July.
Yep.
These are July numbers. What is the potential for that to have kind of triggered a abnormally high number of applicants having sort of been on furlough for the period prior to that, and then coming back into play? Have you seen it in your data?
Yeah, I do think there's probably more people coming back into the workforce, more job seekers after financial year end saying, right, this is it, this is when I'm going to get my new job. I think what's going to be interesting is to see where these jobs are being created.
Yeah.
You know, we've had those short-term jobs being created in spikes in infrastructure and construction, and those are, they have to end at some point.
It looks like the old bogeyman is back, though. Only 12.4 thousand full-time roles. By definition, by extension.
25,000 last month as well.
Well, that was too good to be true, in other words, because it's not been, and you want to see traction, don't you, across the numbers, not kind of these kind of gyrating swings.
And if you take the year-on-year number, you know, we're up on jobs 1.9%. In the last 12 months, we've created 220,000 jobs. So that, you know, the medium-term read here is still relatively positive. What's interesting is that big jump to 6.3%. You know, that is disappointing.
Indeed, that is above, is it not, the RBA's own consensus on where we would see a peak in unemployment?
Yeah.
They were calling out a peak of 6.25. So again, disappointment there. And the dollar move is interesting, though, is it not? Because what we saw appreciation, are we still seeing that incidentally?
Right, we are. It's sustaining that level. You can see on the screen right now with that Aussie dollar, which would be, you'd think, pricing in less of a chance of a rate cut, which seems with the unemployment rate stronger.
Counterintuitive.
That'll be an interesting one to look at the statement of monetary policy, which of course is out tomorrow from the RBA, but might also get your view, Simon, on the as we're mentioning, full-time, part-time split, because the part-time has sort of reversed. It was weaker by 17.2 thousand last month. This time it's come up by, what, 26,100. So there has been quite a disparate split between part-time and full-time in this month's read.
And not only that, the aggregate hours worked are on the decline, down 3.4 million. That doesn't speak to productivity.
No, that's a more telling figure, I think, Carsten, is that, you know, reducing total hours worked, because that has been fairly steady up to now this year and probably beyond that as well. So it's still, I think, going to be down to this breakdown of where the jobs are. People are worried about the unemployment rate in WA, South Australia. You know, the strong figures should come out of New South Wales and Queensland, and we should be seeing that continued growth in the services sector. It's all about the services sector now.
Could it be also some questionable numbers from immigration coming into play here? In other words, we don't necessarily know that the methodology is as it should be, or you wouldn't sort of go there unwarrantedly.
I think that, you know, we're always casting aspersions on the ABS. The poor ABS sort of take the brunt of this. But look, I think the figures have now I think, made everyone believe that they are correct, and the calculations have changed. So it's an unexpected read, Carsten. 6.3%. You know, I think the Economist had it going to 6.1. Others had a consensus at 6.
Even some were saying sub 6% itself, 5.9.
And I have to say that's where I thought it would go. I wanted to prove everyone wrong and say 5.9, because we're still looking at jobs growth year on year. We're still not looking at, you know, a decline in jobs.
Okay, it's important to stress that.
All right, Simon Boulton, thank you so much.